Thanks for coming out tonight and dodging the various flood waters. And welcome to the Small Business and Tax Information Session putting on tonight. It was August last year. I was on a crowded Melbourne tram, just been to a conference, and part of the conference was talking about small business and really being the engine room of the Australian economy. Over 90% of companies in Australia are small business entities. Over 40% of the GDP is raised and generated through small business. Over 60% of employment through small business. Really strong numbers about the whole small business. We looked at the personalities that tend to run small business. They tend to be people that are optimistic, glass half full type people. People who believe in making a better product or offering better service to their customers. And I was reflecting on the tram about running a small business. I run my own accounting small business, and it really is a juggle. There's many things that you need to balance and to get your head around. There's no separate IT department normally. There's no separate marketing department normally. And often there are family commitments as well as the juggle. So you're running your own small business. Sometimes the husband and wife are involved in the small business as well. So it is a real juggle. And at the conference, they talked about some research that UTAS was doing into mental health for small business operators and being potentially a lonely place. And as I was chatting to someone on the way in, as I was sort of reflecting, what could I do as an accountant with my clients or with other small business operators to assist in that way? I'm not trained in sort of mental health issues, but what can I do? And as I was collecting my thoughts, I thought, well, the least I can do is host events such as these to provide an opportunity for small business operators to connect together and to be informed. A lot of small business operators who may be part of a professional association or an industry-based association may have those connection points, but often they may not be able to discuss things relevant to their business if they're potentially competitors. And secondly, there are lots of small business operators who just don't have an industry association. So I was just chatting to Joe before, and they build boats. So, you know, what's the industry association for boat building? I don't know, there probably isn't one. So people like yourself don't really have a natural connection point in the small business area. That's what motivated me to sort of host these sessions, these seminars, and I hope you get something out of it tonight. So tonight's all about tax, but focused around tax, end of financial year. So it's a relevant topic in relation to setting your business up both for this financial year, but also considering options going forward. Hopefully I don't put you to sleep. Tax, when I talk to some people about tax, their eyes start to glaze over and we move on to talking about the footy or something like that. So hopefully tonight I keep you awake for at least until the end of the session drinks happen. Tax also has a history of looking in the rearview mirror and be quite confusing. Just recently we're finishing at work some 2015 end of financial year tax returns for business clients. And that's unfortunately typical of some cycles that accountants and small business operators have got into. And tax also is conditional upon you making money. So sometimes when cash flow does dry up in your business, then tax becomes either a problem in terms of some of the tax payments can be quite lumpy, or secondly, if you've made your decisions purely based on tax, then you've taken the eye off the ball of looking at your cash flow issues, which at the end of the day, that's the lifeblood of the business. So hopefully tonight we'll have some small building blocks for you to take away and consider in relation to how you might structure your business, how you might use the existing tax laws to help you plan your business better. Also, it's about the future, so it's not about the past. We're looking at this baby here who's got all the future in front of you, in front of her. So hopefully we'll look at how you might want to structure your business or looking at future options into the future. And if all else fails, there's something to eat and drink at the end of it. So you haven't got nothing out of it tonight. So a bit about myself. I've been running my own accounting business for 11 years now. I started off in the bedroom at home when the kids were small, and now they've kicked me out of home, and I've got an office space in York Street. And it's really around that whole business advice, incorporating tax advice, and more recently, cloud or internet-based accounting services. And my passion is small business. That's what I enjoy, getting to know small businesses and helping small businesses out. Meet the family, so wife Jenny and 3 kids. The eldest one there, Georgina, she's just left home to study in Melbourne, so we're just beginning to go through the empty nest process now. So what is tonight's agenda? It's about bushwalking around Cradle Mountain, or we could talk about tax, so we'll better stick to topic. We'll go through some tax tips and some tax planning for the end of financial year. We'll touch upon SuperStream, which is sort of doing the rounds in sort of media and other circles, and just try and provide small business with the options they need to address. Siona from MDH will do a short demonstration about how Xero handles the SuperStream requirement, as well as some developments that are happening with the payroll module within Xero. Andrew Lettingham over here from Argonaut Financial Advisors. He's going to provide an update from the last budget on some of the changes for superannuation. Some of those affect small business, but also affects individuals as well. I'll then just provide sort of a brief overview of the structures and the various structures that are available for small businesses. Andrew then has a session. He just wants to leave a few thoughts about how superannuation and other structures might evolve in the next sort of 1 to 2 years. So tax. In your packs there is some more detailed information, but I won't go through it all straight away. But the first element is around timing. So those of you in business, you have your profit and loss statement, your income and expenditures. So there's a flyer in the packs called End of Financial Year Tax Planning towards the back of it. So that talks about, under point 2 there, I've got my numbering mixed up between the slides and the handout, some timing. So they're the sort of things where you may want to either defer revenue. So if you're in a business that, say, you're a building company and you have lumpy income when you want to invoice, so that's looking through about when you might want to do that invoicing out, and consider whether that income has been earned or unearned. Bearing in mind always, cash flow is king, so don't do something that stifles your business. Don't all of a sudden 6 months out from the financial year end decide you're not going to invoice anyone because you don't want to pay the tax on it, because that's just going to wreck your business. But if within certain parameters, if there's opportunities, look at the timing of your revenue. There's also a range of concessions available for small business entities. Typically that's small businesses who turn over less than $2 million. And there's a range of options. Typically they're around prepayments. So once again, if you've got an insurance bill, if you can prepay that in June for the next financial year, then you can claim that tax deduction in the current financial year. Bearing in mind, once again, if you haven't got the cash flow to do it, don't wreck your business. But to consider those options, if you're going to have that cost anyway, look at the timing issues. Same for your repairs and maintenance. If there's some upgrades of some repairs that you need to do for different items, go and get your car fixed in June rather than July, that sort of thing. Next one is about equipment upgrades. So you might have seen in the media or from the budget announcement that small business entities have availability for immediate tax deduction for equipment, plant and equipment or motor vehicles. So my source of technical information is page 23 from last Saturday's Examiner, the Harvey Norman ad you might have seen. So Harvey Norman, they're onto it. They saying, hurry up, time for small business to claim their tax deduction. buy now and get it up to $20,000. So they're actually on the money. So in the fine print, note 2 talks about that up to $20,000 is available for an individual item. So bearing in mind, there used to be an old rule that it was the first $6,500 that you could claim. So if you bought a car worth $30,000, then you could claim the first $6,500 straight away. That rule's gone away, and now the rule is $20,000 or under for an individual item. So if you buy a car for $30,000, it goes into the normal depreciation regime. You can't claim the first $20,000. So just bear that in mind. And I had a client last week who bought the car for $19,999. So I said, well done. So that's once again cash flow allows. Sometimes with some equipment, you may want to asset finance a vehicle. So if you asset finance that vehicle in June, then you've got the loan repayments coming out of the next 3 to 5 years, whatever you've taken the loan over. But because you own that vehicle in June, then you can claim the tax deduction in this financial year. So it's just another little trick. The other one-offs I just wanted to mention, I don't see it a lot, but certainly for companies that may be involved in more research or development of certain products or services, there is quite a generous offering through AusIndustry to claim a research and development concession through their tax returns. As I said, I don't see it a lot in small business because it is quite technical. You've got to write a research and development plan, which sounds worse than what it really is, but there is a technical component. But it is quite a generous one-off option for people. As I mentioned, the small business entity, there's a range of current deductions. In the last budget announcement, they flagged that the definition of small business is flagged to change from 1st of July 16. And that'll go from a $2 million turnover threshold to a $10 million turnover threshold. So the definition of small business is planned to change. The caveat there is that we have an election on the 2nd of July, so depending who gets into power on that day, the budget announcement may or may not happen. So if you're a business who currently turns over $2 million, it may be better in some circumstances to defer that asset purchase, even though I'm saying do it in June 16, and say the coalition gets back into power and they change the definition of small business, then you may be able to claim the full up to $20,000 in 2017 financial year. So it's just a little consideration if your current business is turning over more than $2 million. So the next topic I just want to touch upon is SuperStream. There's a sort of a flyer in the pack. So SuperStream's been around for a couple of years. It's initiated by the government. And the topic, why it's so topical now, is that by the end of June 16, all employers have to be SuperStream compliant in the way that they pay their superannuation guarantee for their employees. So there's no real room after June 16. The interesting ones for me is the canteen at Trevellyn Primary School, for example, one employee got to be SuperStream compliant. So it's often those small little organisations that are being caught up into this sort of setup that the government have mandated for small businesses. In simple terms, it's just a consistent way of information flowing from an employer to the super fund. So they're providing gateways. So I was at the hairdresser the other day, had my hair cut, and the hairdresser was chatting next to me to the lady. She was cutting her hair, and they said the government's trying to track everything now, and they're going to clamp down on SGC contributions and what have you. It's not really. It's just a more administrative gateway for SGC contributions to be managed. So typically, there's most people are going to have a payroll system that they pay their employees. So if you're MYOB or Xero, any mainstream payroll options, there's some fiddly bits to have what they call a USI, a Unique Superannuation Identifier, that links someone's choice that they've made as an employee of what super fund they want their contributions to go to. So you need to match that through. Once that's matched, then Sienna will show how Xero managed it. So it's relatively seamless from there. Often the super funds will also have what they call a clearinghouse There may be a charge to do with some of the clearinghouse or some of the options that super funds provide. So, for example, in Tasplan, the largest industry fund in Tassie, they do have a clearinghouse option. So if that's your default fund, you can talk to Tasplan about setting that facility up for yourself if you want. The ATO also have a clearinghouse option. So if you've got less than 19 employees, there's a free clearinghouse option that you can go, link from the ATO website. The link's on the document here. It's a little bit clunky because you've got basically two systems. You've got to go and fill that in. But in the Trevellyn primary school canteen example, that's the solution that fitted them because they didn't have a payroll system as such that was SuperStream compliant. So there's a range of different options. The other point to make is that just check the timing of when the funds are remitted and when they get cleared and paid into into your employees' accounts, because from a tax perspective, you've got to prove from an SGC compliance perspective that you have paid, inverted commas, that fund across. And depending on which option you select, there's a different definition. So just check to make sure that you have a compliant process in place that is SGC compliant in terms of timing with the quarterly payments. And secondly, to claim a tax deduction for your business for the June quarter, you need to have paid that in cash on or before the 30th of June, cleared your bank account. So another little tricks and traps on that.